It's been 3 years since Nigeria's Petroleum Industry Act became operative, ending a 20-year effort to restructure the nation's oil and gas industry. On the show today, we'll take stock of progress so far and how domestic players are taking advantage of new opportunities. And Nigeria has a bilateral air services agreement with more than 90 nations. However, the country is yet to fully harness the economic benefits of this deal. Does the regulatory structure of the industry, does that need a revamp? We'll give you more details ahead on the show. And Ghana's long road to restructuring its debt is almost over. On Friday this week, the Executive Board of the International Monetary Fund will convene to discuss the first review of the country's $3 billion loan program. First, let's bring you, that's what we have on the show today, but first let's bring you our top headlines from across the continent. Now, hinged on three pillars, the Presidential Fiscal Policy and Tax Reform Committee seeks to address critical challenges around fiscal governance, revenue transformation, and economic growth facilitation. Chairman of the committee, Taiwo Oyedele, speaking during the 2024 edition of the Lagos Chamber of Commerce and Industry's Economic Outlook and Budget Analysis, where he highlighted some of the committee's recommendations for economic growth in 2024.
Our recommendations, for example, is for the government to suspend, that's for 2024, to suspend some taxes. We've identified about 5, we call them nuisance taxes, that just frustrate people, yet we can't even see the money in government treasury. So we've been engaging even with the subnational, because we can't force it on them. But we're trying to let them understand that we need to suspend these taxes while we fix the problem more structurally. And we'll try and find money for you from other sources to take care of the opportunity cost of the money you are giving away. We recommended, and that has already been implemented, waiver of VAT on diesel, and then subsequently CNG and LPG. That's also to moderate and bring down some of the costs that are fueling inflation. The sacrifices of the Nigerian people. So we did first subsidy removal or reduction, if you talk to Bismarck. Whatever we call it, that's close to 4 trillion naira savings a year. We did naira flotation. It's not perfect, but whatever it is, that revenue, you would have noticed, we call it exchange gain, right? Now we factored it into the budget. Whatever way you look at it, we have also close to another 4 trillion. So you're talking about roughly 8 trillion you've transferred from the private sector or the people to the government. So what we're saying to the government is, can we be intentional in spending this 8 trillion to make sure that it impacts the people most positively?
Well, elsewhere, South African Central Bank Governor Kanyago has stated that interest rates will not be cut as long as inflation remains persistent. Well, he explained that real rates are not excessively high and inflation is within the target range, but not at the desired level. Policy adjustments will only be considered when inflation declines to the anchor rate of 4.5%. The South African Reserve Bank is expected to maintain its benchmark interest rate of 8.25%, which has been unchanged since May 2023. The Reserve Bank says it will also monitor public finances and the country's economic outlook, considering spending pressures and the impact of power cuts and infrastructure issues. And the Kenyan Treasury plans to raise 15 billion Kenyan shillings through a tap sale on its January bond after leaving 12 billion Kenyan shillings on the table during the initial sale. The Central Bank of Kenya published the prospectus for the tap sale, which aims to add to the 25 billion Kenyan shillings netted in the initial bond sale. Investors offered just over 29 billion Kenyan shillings for the 3-year bond option, with the CBK accepting just over 22 billion Kenyan shillings at an average rate of 18.39%. For the reopened 5-year bond, the bid stood at 8.06 billion Kenyan shillings with an average asking rate of 19.07%, and the CBK took up 2.9 billion Kenyan shillings at an average of 18.77%. We'll take a break, and when we come back, we'll head straight to the markets. Join us again. Welcome back. Let's get you straight to the markets now, talking about the equities markets here in Lagos. So we saw the bullish trend at the market yesterday, still continuing. The OSHA index appreciated by 3.93% in one day. We saw the OSHA index hitting 87,971 points. Equities saw a significant upswings also, with 75 gainers against nine losers. Let's take you now to the numbers. That's the OSHA index right there, adding another 3.9% gain on the day. So it looks like this momentum will continue on the Nigerian Exchange, with market investors still focusing on the strong fundamentals. Let's look at the other indicators from trading yesterday, talking about the market capitalization. That also climbed yesterday, 3.9% at over 48 trillion. Now let's look at the day's top gainers. Let's look at the gainers that investors put their bids on yesterday. Sterling Bank from the banking sector took the top spot, up 10%. We saw Dangote Sugar also up 10%, closing at 81 naira 40 kobo per share. WAPCO up at 47 naira 30 kobo per share. So all 10% gains for all of the best-in-class stocks yesterday. Julius Berger and, of course, Honeywell Flour up at 4 naira 40 kobo. Let's take a look at the top losers for this session. From the session yesterday, Royal Exchange from the insurance sector slipped 8.16%. Multiverse also lost out yesterday, down 6.59%. Ella Lakes down 4.79%. Owando from the oil and gas sector shedding 3.6% there. UACN also in negative territory yesterday, closing down at 15 naira 50 kobo. If we have the sectoral performance, perhaps we could also take a look at that. So for the sectoral performance yesterday, banking sector, still the most liquid sector of the market, taking the top spot once again, up 4.3% on the day. So we're seeing the financial services stocks taking the lead yesterday for investors, 5.8% up. That's for the insurance sector. Oil and gas still adding to gains from the previous session, up 0.11%. The consumer goods index still holding on at up 2.97% this time, while the industrial goods also ended in positive territory, up 9.72%. Those are the numbers. The market, of course, is open for trading today. Market began trading at 10 a.m. and, of course, we'll keep tracking the numbers, and it looks like investors remain optimistic about trading on the local bourse. We'll take a quick break. I'll be right back with our first conversation. Join us again. Welcome back. Now, it's been 3 years since Nigeria's Petroleum Industry Act was signed into law, bringing to an end a 20-year effort to reform the country's oil and gas sector. The act is one of the boldest attempts by the country to overhaul the industry. In 2021, analysts told us the PI would attract more investment opportunities for both local and international investors and just boost overall economic development in the country. Was that the case today? Kola Karim, Chairman, Shoreline Group, joins us to take stock of the PIA 3 years on. Kola, thank you for joining us today. Let's just jump right in. It's been 3 years. We're looking at 3 years after the PIA was passed, and how the industry has changed since then. Perhaps if you could just mention 2 or 3 areas in which we have seen, and for you as also an indigenous player, 3 factors or 3 elements that are different in the industry today.
Thank you, Esther. One very big area is decarbonization. Decarbonization came in and it's become a big push, a big mantra in the global oil and gas sector, and that is in turn affecting capital. But let's right-size the position. The PIA is now in force 3 years on. What we've seen is the opportunities for local companies to be in the position to buy up assets from the multinationals who have been operating in the oil and gas sector in Nigeria in the last 40 to 50 years. These guys are not leaving. They're right-sizing their portfolios, selling old assets and reinvesting deep offshore where the local companies, indigenous players, are better suited and got a better fit to dealing with the local communities, the local issues, and that way it becomes a streamlined operation in making a simple and easy fit for everyone. Nigeria wins.
Right, for domestic, I'd like us to focus more on domestic players. Obviously, they've taken on some of the assets of the IOCs. Just a few days ago, Shell came out to announce that it will be selling its Nigerian onshore asset, SPDC, for $2.4 billion. I believe there's already a buyer for that. But just talk to us about the other opportunities, specifically for indigenous players, the opportunities they're taking advantage of, how the regulatory environment is supporting them as local players, taking on from where the IOCs left off, etc.
If you look at what has happened the last 10 years, especially, because of the lack of passage of the bill, which is now morphed into the PIA, the major oil companies stopped investing in oil and gas. All they were doing is what we call running production from 2.2 million barrels. We went as low as 1 million barrels. But what you've seen in the last 18 months to 2 years is we've seen a systemic repositioning of these often oil and gas assets that's required investments being taken up by Nigerian players. An example, if you look at Exxon sold its shallow asset to Seplat. You look at the transaction that was just done by Equinor, which was taken by Chapal. You look at this transaction by Ajib, which was taken by Oando. You look at the transaction also, the Total 10%, which was sold or in the process of being sold from SPDC with the consortium of indigenous Nigerian players who have been positioning in the oil and gas sector. What this confirms is the changes in the local indigenous players. We're bolder, we got a lot better. Remember, Nigeria's got 3 decades or 3 generations of oil producers, oil men in Nigeria. So there's experience in this country. And if you could put that, mobilize that with relevant.
It looks like we may be having some audio issues with caller there. Let's just take a quick break at this point, see if we can fix those issues and continue with the conversation. Join us again. Welcome back. Unfortunately, we couldn't continue our oil and gas conversation, but we'll definitely bring you that conversation at another time. In the meantime, let's head to our international headlines and see what is making front and center at this time. The dollar index reached a 1-month high against a basket of currencies as a U.S. member of the Federal Reserve Board of Governors of the U.S., Christopher Wallace, remarks tempered expectations for a rate cut in March this year. Waller emphasized that the Fed should not rush towards rate cuts until it is clear that lower inflation will be sustained. Consequently, market expectations for a rate cut in March decreased to a 6 to 2.2% chance. Meanwhile, China's economy is still grappling with challenges as the new year begins. Deflation pressures and a property crisis persist, leaving investors unimpressed with current policies. While China achieved its growth target, issues like disappointing home prices and deflation continue to persist. A broad measure of price changes has been recorded its longest stretch of declines since 1999 Asian financial crisis. As 2024 progresses, attention shifts to how policymakers will support the economy. Elsewhere, Japan's market is experiencing a significant resurgence, with experienced traders leading the way. After years of settling its benchmark rate near zero, the Bank of Japan is now poised to tighten its monetary policy, creating new opportunities for seasoned traders. The prospects of a BOJ tightening its benchmark rate has sparked excitement among traders in the country. Now, this shift in monetary policy has resulted in various positive developments in the market. Big pay raises and new job opportunities are emerging, attracting traders to the Japanese market once again. Those are our top headlines. When we come back, we'll head straight to our next conversation. To join us again. Welcome back. You're watching Business Edge. The Nigeria's aviation sector continues to contend with a myriad of issues, including infrastructure deficiencies, high operational costs, high fares, constant flight delays and cancellations, among others. But despite having a bilateral air services agreement with over 90 countries, the economic benefits of this agreement is yet to be fully harnessed. Now, does the sector's regulatory framework need an overhaul? Olumide Ohoayo, General Secretary, Aviation Roundtable Initiative, joins us to look at the sector and what to expect this year. Olumide, thank you so much for joining us today. Let's just jump right in. The challenges in Nigeria's aviation industry, particularly, and we're going to be focusing now on the domestic air travel. We know there's so many issues that continue to persist, a number of which I've just mentioned. Some analysts, and even industry players themselves have pointed to the regulatory framework having a problem. They say that perhaps that's the first place that the government can start from. Is that your sentiment too?
Yeah, I totally agree. If you look at the result of the last ICAO safety audit, that was the worst ever. We barely passed, and we had some gaps that we have been given about 90 days to close. And the new agent, DG, and the other agency heads that came in are now saddled with responsibility of closing those gaps and then letting us get those marks that we always had in the past. And if you look at what happened with the 3 runway excursions, Port Harcourt, Abuja, and Ibadan, that we had towards the end of last year, and they ran concurrently, it showed that the subsidies are lagging behind in a safety area, and we need to work on it before it degenerates. And I'm happy that the new DGNC has promised to look into it and has promised to ensure that it restores the credibility and the respect that we have. Luckily, we have not lost our category 1. We must do everything to retain it as we have done over the years. But there's a lot of work to do in the regulatory area, the industry.
Let's talk about the domestic players, looking at the business itself, the business of running a domestic airline in Nigeria. Over the years, in the last 10 years, we've seen a couple of names come on and just disappear, sometimes even overnight. There are problems with the fleet, how many planes they have or aircraft they have to cover certain routes. You and I are and we're all very familiar with the flight delays, constant flight delays and cancellations, etc. Now, many of them point to the high cost of the business in the first place, the high jet fuel cost, the cost of credit, high interest rates, etc., inflation, dollar scarcity. How should the authorities begin to address some of these issues? We know there have been interventions in the past. Many of them say it hasn't done much. But what should be different this year?
Well, I think we don't have to do any intervention anymore because all interventions that have been done in the past have not been successful, or we just find out that banks are losing money, government are giving money away to some investors who now trade into other businesses and walk away, like the issue of the Virgin Nigeria case with Jim O'Brien. I agree with you that we've been having it topsy-turvy with domestic airline operators and ownership. And I think we should not lose hope. We should not despair. We don't have no other option than to continue to encourage the operators and also encourage new sets of investors to come in. Nobody gets it right at the very first time. But over time, with repeated trial and using different methods, we'll get it right. And that's why my organization, in a recent press release, we told the regulator that there's a need to get another strata of airline operator certificates. What we have now is one fit all, one that you must have, the new one coming up now, you must have a minimum of 6 aircraft to be able to apply. And we are saying, like some other countries, we need to have another level of AOC. AOC is Air Operator Certificate. And we're looking at what we have in America. In America, there's a Part 121 and a Part 135. The Part 121 is the stringent one for scheduled and regional operators, while the Part 135 is a bit relaxed for charter operators and air taxi services. We are looking at that we can use that 135 to develop a new set of licensing, so less stringent. And this set of licenses, we're looking at aircraft seats. there will not be more than 100-seater. So this set of airlines will be the low-cost airlines who will be operating airports that are not viable, that we are termed unviable at the moment. So rather than competing on the Lagos, Abuja, Port Harcourt that are already big, they will be operating short routes, Benin, Asaba, Benin, Onitsha, Benin, Anambra, or Anambra, Owerri, Anambra, Port Harcourt, or Benin, Kebbi, Sokoto. Those are the kind of short routes we are looking at. And that when flights get into all those airports, you are developing those airports. You are bringing air services closer to the people, and then you are putting more people to fly. And with that, as you're doing those flights, you have more passengers boarding. There will be more revenue for the agencies, and even the existing airlines would also like to either partner or even create subsidiaries in that will fall into that kind of AOC group, and that will increase the services in the industry and help and put more seats in the air. And so that the other ones can concentrate on the trunk route. And even when they have issues on the trunk route, they can rely on these small ones to augment with their services. And these smaller ones can fly even when the visibility is poor. They can fly into short runway airports. And you see, they have advantage because they're smaller aircraft. They can easily maneuver journey back with that. They can maneuver with the shorter runway. And even when we have issue of the lighting system. So I think I'm in support of that. We're in support of that, and that the regulatory authority should look at that second tier of licensing for smaller airline and air carriers, so that they can use those airports. And I think that will increase services to Nigerian people. What you are seeing now, the high rate you are seeing in ticket fare is not only because of fare, but because the seat supply is low, and passengers are flying because nobody wants to go by road. Because alternatives of going by road is paying 20 million or 30 million ransom. So we have people who are forced to fly because of the insecurity in the country. Again, but the supply as a project is not enough, and we need to increase the supply.
But if we're seeing a higher number of people flying, obviously the domestic players themselves have to increase capacity, but it would appear that it's difficult for them to do so, which is why we see that resultant flight cancellations and delays. But let's move on. When you think about the plans that the new Minister of Aviation has for the industry this year, in your mind, does that align with the needs of the industry and how the challenges ought to be addressed?
Well, I think I have issues with the plans of the minister. Yes, good on paper, the KPIs, the continued slogan of renewed hope of the federal government. But then, May 29th last year, while Ayadi Sirika was departing, he expanded the directorates, added more directors, and with that expansion, you have increased the cost of operations for the agencies. Yeah, the running cost now has been increased because you have expanded it with more directors, and with these more directors, you're going to move GMs, AGMs around. I'm thinking that with the new minister, he was going to come reverse it to the pre-May 29th organogram that was in the agencies. But surprisingly, he even expanded it by adding more directorates. Now, these are agencies that are already begging and having issues with funding pensions, funding salaries, funding trainings, and also funding assets that are needed, or infrastructure that are needed to develop the industry. Now we have added more directorates and put more stress. So I don't know how we want to marry this expansion of directorates and the renewed agenda of running the agencies efficiently. As of today, aviation is dominated by the public sector, the production of services. So if the agencies are not up and going, there's no way the airlines can move. And the airlines have said the agencies need to improve. The agencies need to be brought to the table to account for services that the airlines are paying for. So when the agencies are already top heavy, you already politicized the appointment, how would they run effectively? How would they be able to effectively provide the services? I appreciate some of the appointees. The DGSA, the acting agency, is a corporation. I appreciate it. But then, how would we cannot be alone when you have more directories and have more expenses. And I think this is the area that the minister needs to accept that they need to reverse and reduce the number of directorates. How they want to do it, when they want to do it, I don't know. But it's expedient that the federal government look at that area so that the agencies can run efficiently.
All right, thank you so much. We're going to have to leave it, Mr. Ohwaye, for talking to us today. I mean, obviously, domestic passengers are hoping for the best this year in terms of better efficiency and perhaps even collaboration among the airline domestic carriers in Nigeria. Of course, that was Ohwaye from the aviation sector talking to us about what to expect this year. Let's move on to Ghana now. Of course, we know that Ghana, if we could just get that up, Ghana is expected to meet with its bilateral creditors soon. And of course, the IMF board is set to consider a $3 billion loan request this Friday. We have our analyst joining us now from Ghana to talk to us about that. If you can hear me, let's just get right to it. The IMF is set to meet on Friday, the board, executive board, to consider the first review of Ghana's $3 billion loan program. If the board, of course, if the board gives its approval, that could unlock a $600 million disbursement for Ghana. How optimistic are you? How optimistic is the country?
Yes, thank you very much. Am I audible? Can you hear me?
Yes, go ahead, please.
Perfect. So yes, I mean, I think last week, the government of Ghana, according to the feedback that we're getting from the Minister of Finance, successfully had its way with the Official Creditors Committee, which is a group led by France and of course China in there for restructuring about $5.4 billion of Ghana's external debt. So it's part of the program of the IMF, of the IMF bailout that the Ghana government has gone under. So the government of Ghana is under a $3 billion IMF loan. And for those money to be dispersed to the country, first, the government of Ghana, were even to be accepted to the IMF bailout, had to do a domestic debt restructuring. And that was done. So that led to the release of the first tranche of the $3 billion, which was about $600 million that came in. And again, to unlock the other part of the money, which is about $600 million, as you mentioned earlier, the government again has to also get a deal with the Official Creditors Committee worth about $5.4 billion. And currently, as we speak, the government of Ghana is external total debts around $30 billion, and it's part of the plan of the government to restructure about $20 billion of those. And majority of the external debt is actually owned to private lenders through the issuance of government bonds within over the last couple of years. So that is where the crux of the matter is. But for this second tranche, yes, the government is will successfully have a deal with the Official Creditors Committee that they had a meeting, I think, last week or so, and that has led to them, officially being able to unlock the $600 million from the IMF. And this is also not just the IMF money that's coming in, pushing the government in office. We also have some budgetary allocation from the World Bank, totaling about $550 million. So in all, we are talking about 1.15 or $1.2 billion that is coming in as a result of government, getting the deal with the Official Creditors Committee recently.
I just wanted to know, I mean, what happens next? Because we've been in this on these conversations, obviously for obvious reasons, because there's still things are still developing. Ghana is still waiting for that second tranche of $600 million from the IMF. But what happens if hopefully all of this is wrapped up in terms of how the fiscal authorities proceed?
I think we are lucky. I mean, of course, when you look at even the trends in terms of how fiscal indiscipline works in countries like Ghana, mostly, especially when we lead to election year, like this year is like this election year. But luckily, we are in the IMF program, which actually puts a bit of restrictions on what the government can do, because we've always seen some ridiculous, fiscal indiscipline whenever we are in an election year. That we take time to build our economy in 3 years, and the last year of election, we use that year to actually bring everything down. But hopefully, this year will be different because of the IMF program that the government is under. And of course, now almost all multilateral and bilateral lending are very sketchy in terms of what they think governments can do in 2024. So going forward, I believe that we might have a room for some fiscal discipline because of the IMF program. We cannot, of course, as I said earlier, you cannot really rely on only the government saying that they're going to remain fiscal discipline even in the election year, unless, of course, because of the IMF program, that we are sure that we can have some fiscal discipline in the country. So for me, going forward, I believe that we can stay on track if we really, really commit to some of the fiscal discipline measures that we are receiving as a result of the IMF program. Of course, even now, countries like China that usually will get money in terms of huge investment to do your infrastructure development, they are also very now being cautious now, because they also have a responsibility and a role to play in ensuring that countries do not plunge themselves to debt that are unsustainable, because that is the situation of Ghana currently. I mean, look around the world. Talk about Sri Lanka, talk about Zambia, and you're going to mention Ghana as a country that is in huge debt distress now. So I believe that if you can stay on course, even though the $600 million, yes, is coming in, you're getting a budgetary support from the World Bank, about $550 million, or to them about $1.2 billion, which also boosts investor confidence that indeed some of these things are coming along. And of course, it's even Fitch rating indicating that we'll be living out of the debt default situation. So I believe that this development will help us, going forward.
All right, let's broaden this conversation a little bit. I'm happy you talked about, rising debt levels in certain countries. As a matter of fact, a report from, I believe that both the World Bank and IMF have highlighted that debt levels in sub-Saharan Africa will continue to rise this year, both debt levels and also the debt service levels, of course, leaving the fiscal authorities with limited funds to address other line items in their annual budgets. What lessons are critical to learn or to keep in mind at a time like this? Perhaps also look into Ghana's experience and how it's also unfolded in Zambia.
Yeah, so for the debt conversation, I believe that, as you said, we had this conversation over and over. It's a worrying trend. It's not the first time in the history of the continent of Africa that we are seeing a number of countries that are under debt distress. We saw that in the structural adjustment program post-colonial era. A lot of countries were plunged to debt, and of course, gradually they were able to build themselves up. In fact, Ghana as a country, we even went under HIPIC, highly indebted poor country, for us to be forgiving a large chunk of our debt within that period, I think early 2000 or so. And then we were able to build our way back to becoming one of the fastest, when you talk about the 2010, 2012 coming, the top 10, when you talk about the top 10 fastest growing economies in the world, about 6 of them were in Sub-Saharan Africa. But unfortunately, we are not having that same momentum now. Again, when we talk about the debt, we have to also interrogate, in some countries, we need to look at what those monies are being used for, because usually these are small countries and they're embarking on major infrastructure projects. These are huge projects that these countries are embarking on. So obviously, you can have a situation where Ghana is doing a railway which costs about $4 billion, that can balloon our debt level. So in as much as debt is a worrying trend, we also need to look at the component of the debt. What were these money being used for, right? Again, for lessons to be learned, I believe that we have to be we are not fiscally disciplined as a continent. We have so much expenditure beyond our means. Government are spending money frivolously without even accounting for it. The corruption-related issue that we have on the continent. All these are lessons that we need to because we need to be prudent in the little that we have. We need to be prudent. We need to be innovative in even being able to generate enough revenue domestically. In the case of Ghana, we got to a point where it became very much like a trend that government, because it's easy to go to the capital market, they have a room there to go to the capital market, so you just issue any bond, get oversubscription, they get excited, and then they keep taking on loans without really properly checking what these monies are being used for. What are the implications of this money that we are getting? Once we spend this money, what is coming in? Is it coming in the next 5 years? Would it be enough? Would it be coming in at the right time from when these loans that we are taking are matured or otherwise, right? Are we being disciplined in some of the projects that we are doing? Are they value for money projects that we are doing? So there's a whole lot of lessons that we need to learn. And I believe that hopefully we will not be having this conversation again when these countries are able to lift themselves out of these burdens.
All right. If I could just squeeze in one last question. We know that obviously these African countries, when it comes to going to the international markets, the interest rate premium is high, obviously because of the associated risks. What other avenues can African governments look to? I know that the AFDB, the Afrexim Bank, also pitch in from time to time, but where would be a good place also to turn to?
I think we need to build our domestic economies very well. We have room to really generate enough, resources internally if we are very structured. All these money, for example, you go to China for money. Where does China generate its money from? Generates money from its economy. So if you go to Saudi Arabia for money, where does Saudi Arabia generate money from? Generating money from the domestic economy. So I believe that we'll have the capacity to do it. And as a continent, I mean, leveraging on some of the continental deals that we have, like the Africa Continental Free Trade Area, what are some of the things that we can leverage on to build our domestic economies? Because that's the most reliable way. I mean, in so many uncertain times, we can all agree that having a strong domestic economy is enough to generate you the amount of money that you need. And that actually positions well, so much so that even when you go to the international capital market, your risk level is reduced because they can know the trends in the local domestic economy and what you've been able to achieve. And that can even help you get money at the capital market at a cheaper rate than we are getting now. So I believe that building domestic economies is very important. Government being innovative in the sources of revenue that they can generate, broadening the tax net, getting people in Ghana. We've been talking about what we call property tax. It's been on the government's radar for years now, where we are saying that government can generate enough money from property tax. But as we speak now, we still haven't had our way around it. So I believe that these are some of the things we can do to be able to reduce our dependence on the international capital market with this huge interest rate that we have to pay.
Right, Paul. Paul, I must thank you for your time today. Thank you so much for talking to us and, of course, sharing all that insight. Hopefully, this all ends well. Paul, you're a Frimpong development economist and executive director at the Africa-China Center for Policy and Advisory. Well, that's our show today on Business Edge. Thank you so much for being a part of it. Remember, you can follow us on social media. We are at News Central. From the team and I, it's bye for now.